Hey everyone, my name's Andy. I'm with Finding Value Finance. I'll be your host today. I've got Kasper with us, or UseLink INV on Twitter. You guys want to follow him. So thanks for coming on, Kasper. Really appreciate it for spending the time to come onto the channel.
Yeah, my pleasure. I've been on quite a few times now. I think we're closing up on 10 times. So it's a pleasure to be back, and we cover the markets every few months. We go through the markets and have a good time. So my pleasure.
Yeah, thanks for coming. So right now, what do you think looks good right now? I know gold and silver, we were talking about it before recording. I think it looks good too. So what are you seeing in gold and silver? What's your opinions around those sectors, and why not does it look really good?
I think that if you look at both the metals, but also the gold and silver miners, the SILJ and GDX and so on, all of those or both of those are looking like we're just before a massive move up in both the metals, but also the miners. It looks really, really promising here. But again, we have to wait for the breakouts, but I think it's coming. I really, really do. And I think we will have a big move for silver very quickly into the 40s, and gold will go way into the mid 2000s. Within the next, at least maybe the last year, maybe even quicker if it really accelerates. So definitely there is also the gold to silver ratio is pointing to that possibility. I think we have a fractal looking back to 2009 and 10, the exact same move, and we will have a huge breakdown in that ratio, which will obviously make gold and silver go higher, miners go higher. So definitely, I think gold and silver right now is where uranium were some time ago. Where uranium looked really primed for a move up in the charts. So yeah, gold and silver looks really tasty. That's for sure.
You've
So
been have you been aggressively accumulating in gold and silver mining companies or anything?
I
Just kind of
have
watching still.
I haven't had enough dry powder, let's say. I did buy some, but I would have liked to have had a lot more ready to deploy. But I have a good position. I bought, a lot of, not a lot of it, but a decent amount in 2020. So that's of course somewhat in the red. No excuse there. But still, I've been buying 5, 6 stocks, that I think will do very well, for this coming move here. So yeah. I wish I had more, but yeah, it is what it is. So
So when you're looking at gold and silver and you're evaluating the charts or whatever you look at, what gets you the most excited? Is it the combination of the ratio, the physical metal, and the ETFs, or is something leading something that you normally see, like the ETFs and the accumulation of the ETFs, then the physical, or the physical, then the ETFs? Like, is there a sequence that you look for? What gets you so bullish on it at this time?
actually, I think it's all of them. But what I'm looking at not on a daily basis, but I think the most important chart to look at is the gold to silver ratio. That is often where you will see if the move is ready to go, in my view. And I think we can look at it here in just a few minutes here. But I think that is pointing to that we are going higher, and then you can look into the gold and silver chart together with the miners, which are sitting just below big breakout levels and trend lines. So I think it's a mixture of all really that looks like we are going to go places here very quickly. If I'm right, of course, but I think that's a very good possibility. So everything is possibility. So yeah, it looks really, really good.
What are you the least bullish on in the short term here
Least
across the
bullish?
commodity sectors and stuff?
It's a tricky question because if you look at copper, I think if copper gets above $4, it looks fantastic. Again, I think oil is trying to put in a bottom here. I think the maximum downside we could go is into the mid 60s. So also energy, like oil looks really, really good. And yeah, uranium, if you look at the uranium divided by the uranium miners divided by the uranium spot price, that also looks very prime for a move up, even though I think the ETFs have done quite well, but the mid and low tier miners has done quite poorly compared to the spot price. But I think that's also about to change. So I think it just looks like across the board. You can also look into banking and real estate and financing. It looks really, really good. Like a crack up boom is coming for the next, yeah, in 2024. So yeah, yeah, that's my answer. I mean, there are really a lot of opportunities to take advantage of if you have the yeah the opportunity to do it. It looks really good across the board.
Um, Looking at this kind of across the board, I know you're really bullish right now. Did you kind of expect this as an outcome, or did this kind of catch you off guard or by surprise?
I mean, the overall equities like the Nasdaq and the SP 500, the moves that we have seen for the past, let's call it the past year, maybe the past 6 months, has completely caught me off guard. I was in the bearish camp, this was a huge bear trap, and people were way too excited, but it just kept grinding higher. And every pause that we had was like a small bull flag, on a daily. So I'm very surprised. I really am. And on that note, I was very wrong. I was very bearish, and I was put to shame, really. But right now we are both for the Nasdaq and the SP 500. We are at double top scenarios, so we are also at a crossroad right there. But definitely, I didn't expect 2023 to be this strong for the overall markets. But we have to remember, it's only 7 stocks that has done all this work, right? The mid tier and the lower size stock in the Nasdaq and so on hasn't done that well. So it is the big names, the Nvidia, Apple's, Microsoft, and all those. They has done all the work, but definitely amazing run here, really. And yes, I'm surprised. I really am. So I'll happily
Okay,
admit
so how
that.
about we
So
dive into gold and silver and see what you're seeing in the charts? Real curious to see. You said you saw a fractal potentially in one of the ratios, and you've got some other things that are creating this bullish outlook. I'd really like to see what you got.
yeah, sure. I'll just happily share my screen here
Mhm.
if I can. Let me see if I can share the correct screen.
Yep,
So let me know if it shows.
it's good. We're
It's
seeing.
good. Awesome. So yeah, the gold to silver ratio, and that's not the gold to silver ratio. 1 second here. I'm just gonna find it. Um, where is it? There it is. Excuse me. Gold to silver ratio. Yes, I'm just going to remove the stuff here. So the fraction that I'm looking at here is basically if you go back to the big financial crisis in 2008 and 2009. And and really this was, the big scare when the gold to silver ratio spiked heavily. That means that there was a huge scare in the market, a lot of fear, the dollar rising and equities just tanking. And ever since we peaked out, we have kind of made this move, what we're seeing here. So a huge move down and then sideways action, which is usually bearish. And if we go to what we saw in 2020, we had that big move up here. A funny thing, actually, the move up when it started, the ratio is the exact same move, roughly 38 in the ratio. And also then we are coming down big time, and now we are just doing the exact same thing in my view. So these two things here, those fractals look completely identical, more or less. And to me, it's only a matter of time before we start to collapse here. Same thing as we will do here. So yeah, that is why I'm very bullish on gold and silver, because the ratio between the two really points to a huge collapse here, as we saw, in late 2010. Yeah, so that is my case for the ratio. And we can also look into the long-term stuff here, but really I want to boil it down to, and I think I showed it last time as well. If you look here, if you make this Fibonacci extension on the moves down, then you can see why I think we are going to see single digit um,
Show.
numbers in this ratio, really. So we have, perfect alignment here, which goes back to 2011, and then you also have a perfect alignment with the fib going back to the 80s. Then ultimately, you actually have the physical ratio between gold and silver, which you dig up from the ground, which is roughly 7-1, according to Keith Neumeyer and his First Majestic. So I think the alignment here is just too good to ignore, and I think that is a possibility why at some point in time you could actually see that single digit uh, gold to silver ratio. But it will only be for like a day or two intraday, and then we will come back up quite strong or quite fast.
So with that ratio going down there, I don't know. I'm pretty sure silver's only done that with gold going higher, correct?
Yes, true.
I mean, this is like a massive outperformance of silver if we were to get that, because that's in an increasing gold price environment.
Yeah, it is. It for sure is. And also, yeah, I think if let's go down to the shorter time frames here on silver. Really, what I'm seeing here is we have the 2011 high at roughly $50. Ever since we have been making this double resistance right here, the golden resistance there. And if you look back, actually, I think you have quite similarities to here. So I think this is where we are in time. And when we broke that long-term trend line there, we spiked up heavily. And that's also what I'm saying, thinking that we will do very shortly when and if we get above $26. And why is 26 so important for me? I want to show you. Let's remove the shorter term stuff here. So really, 26 is to me a confirmation that we will get above that huge inverted head and shoulders. You have the pits right there. So roughly 26 or a tad above. That will trigger some shorter term moves, which will then trigger longer term price targets. And again, if you take this as a pole, I want to show you that pole there. If you add it on top, then you can actually see that we are going into the 40s. This was a quick draw, but I think this is pointing to roughly $48 for the silver, which means that we will then be very, very closely, or very soon we will complete the very famous cup and handle. And again, this is on a log scale. So yes, it sounds insane, but it is still my belief that we will see some insane silver prices in the future. So if you take the bottom here to the top, that actually points to, yes, $600 silver, not tomorrow, but in the decent future. And if you are at roughly, 8 to 1, let's call it 10 to 1, that will mean that gold would sit at around $6,000, give or take. And I don't think it's out of the ordinary to believe that gold can triple from here, going from 2 to 6,000. That's not, I think that's would be actually very bearish, but yeah, again, silver, again, as you can see here on the weekly, very close to breaking some very big levels and trigger some big targets. And it will come very rapid because silver does nothing for like 95% of the time, but the last 5% when it really moves, it moves very quickly. And I want to show you some examples here, just going back. Here did nothing for like for roughly 2 years, and then in like a few months we did this entire move. Same thing here. So you can see ever since we break big levels, it is a one-way street really for silver. And it is my view, when we break the 26, we will very quickly get into the 40s. Very, very quickly.
Now, do you think we're going to stop at that 40 something dollar level and sit there for a while? Or do you think we're just going to do He-Man through everything and break the 50-ish barrier level and then just rip like we've never seen before to all-time highs? What's your kind of opinions around that?
I think we will break the all-time highs, but I do think that we will get into the 30s again, mid 30s, and then we will snap higher again. I would be surprised to have a clean cut of this. I do think that we will have some sort of pause just to catch our breath once again, and then we will go higher. So yeah, I do think that is how we will do it. Again, this will not be in a straight line either. It will be very, very volatile, but with more momentum to the upside compared to the pullbacks that we will get.
And when we do break 50, what do you, I mean, if we talk about single digit ratios or even a 1 to 10 ratio,
yeah,
and gold's at 6,000, you're talking 600-ish dollar silver or something like that. What does that move look like after we break 50? Is that just going to be an absolute, is it just going to rip, or like what's your opinions around that?
I think the only thing I can say, it will be very volatile, and the pullbacks will be very, very scary when you first are in those pullbacks, because it is silver. It's a small market, so you can, with quite a low amount of money, you can actually push silver up or down quite easily. So the trajectory will be very difficult to say, but I will say this: it will be very volatile in both directions. And the target is roughly $600, give or take, but you could overperform big time at the at the later stages into that move, so you can overperform quite heavily. So yeah, that would be my answer for you. I cannot. That will be very tricky and very, very difficult to sit through for that period of time.
Do you think we're going to get there in a short fashion like we've done in the past, or do you think this is like a grind higher all through the 2020s?
I think it will take the more or less the entire duration of this decade. Yes. So it will be very spiky up and down, but it will take roughly at least 7 years to get there. But that is also a massive move. We are sitting at 25 right now, so that those are high numbers to talk about now. But the charts for me points to that, and that's all I can say. I'm only talking from what the charts are showing me, and that is what it is pointing to. And even if you don't get to that, single digit, even if you get to like 20 to 1, that's also a massive move for silver, getting to $300, $400 for silver. So I will be pleased with that, that's for sure.
It's insane even thinking about that. What do you think the equities would do with a move like this? Do you think they're going to be supercharged to the upside? I know we're cheap in relationship to the physical metals. Do you think that's probably one of the best opportunities in the market that we have today?
Yeah, I think especially the miners right now is where uranium were a few years ago. Very hated, very, very low. No one was looking at it. And we can actually go to the chart really and look at, for example, I want to show you here quickly. This is the weekly of the GDX. So this is the juniors for gold. We can do silver right after. But definitely you can see here, we had this huge move here from the March 2020 lows all the way up to this high here in August 2020. And now we are at that huge long-term resistance coming across here. So I think if we can get above roughly 40, that will be the start of a whole new move for the GDX to go at least, very close to the hundreds. So we have like a 2.5x here in the ETFs. But there will be stocks that will perform way better compared to what the ETFs will do. But again, we are, just like we saw on silver and in the gold to silver ratio, we are at a very critical moment in time here. If we can clear that horizontal white resistance, but also that golden trend line at roughly 40, that will trigger levels that will be, in my view, the trigger of the bull market for the miners and the metals as well.
So when you look at the companies, the mining companies, are you favoring gold junior producers or silver junior producers, a combination of both? What are the vehicles that you're using to play this bull market with?
I'm playing both the gold and silver, and also some of the miners that I have both, so they are getting both the metals out of the ground. I have some bigger names, some smaller names, and then I have some very small names that, I only need one or two of those to really go for the big move to outweigh the others that might not do anything or go bankrupt, whatever. But definitely some of the smaller ones that maybe have like a 20, $30 million market cap could easily 10x, 20x, before you see 2025 easily. But you have to pick them with care because, yeah.
If we're talking that silver has the potential to go to multi-$100 in 2020s, I mean, shouldn't we be looking at the companies maybe differently than what we have done since, like 2020? Because that 2020 move was just a move based off of money that was created. Yeah. But when I look at the fundamentals, and I know you're more technicals, we are going to run massive deficits in silver all from today onward. We're running a 450 million ounce deficit this year. That's basically half of production of silver, and it gets more intense as the 2020s goes on. I'm just trying to talk out loud. I know you're more of the technicals, but I just think of that and I'm like, man, maybe I should get some of these companies that just have a whole bunch of ounces in the ground and just buy those and sit on it, which I'm doing.
Exactly. Yeah, exactly. But, and also, those companies might not be a producer or a mine right now, but if you have a small company that makes some big discoveries and you start to see silver going way higher, you will have the bigger names like the Barracks and whatever their names are, they will start to buying these companies because they are running out of gold and silver as well. So they need new ground to produce from, and definitely they could get bought out, at a lot higher evaluations than we are currently at the moment. So yeah, definitely.
Okay.
Definitely.
All right. And then in terms of like your ETFs, do you ever do a ratio of an ETF to an ETF? Like GDXJ in relationship to SILJ or something like that? Because I've been doing that, and SILJ just comes out as
On top, yeah.
the top ETF that just beats everything, it seems like. And it's ready
Yeah,
to break out. So
yeah,
it
it
looks
is.
pretty interesting to me.
Yeah, as you say here, it is ready to break out really as well. Together with the gold miners, the silver miners are sitting at the exact same spot, ready for a breakout. I haven't done that ratio in quite a while, so let's just do it on the fly here. So it's been a. You want to do it again? The gold juniors or
GDXJ, yep, you can do those. Those are
let's see it. Yeah,
two fire starters too. Like
yeah,
they're both going to do well.
yeah, they are. I mean, yeah, I can
It's
see.
just cheap.
Yeah, it
It's
is, and
so cheap.
you have some lines coming down here where you can see the bottom of that trend line really. So, but for now we have still made lower lows and lower highs, but definitely we are to some degree trying to really start to have something going in favor for the SILJ. Um, this is just a quick draw, right? But yeah, definitely you could argue that silver miners will outperform, and that's also usually the case really. Um,
Mhm.
Once they start to move.
Yeah, it's almost like we're at the beginning of a very large liquidity cycle, and gold and silver are positioning for that. Same with like Bitcoin and all the cryptocurrencies, and all of the markets are starting to position for it as well.
Yeah,
So I think with the deficits being so large where they're at in silver, I just get I'm drawn to the silver sector. I'll just say that. The
yeah,
silver
and that's also
miners.
why. Yeah, that's also why as you mentioned, half of we are in lack of half of a year production, like 400 million. And again, if you have that deficits, that only speaks to higher prices. And again, that's when the big numbers comes in. It makes sense from a technical point of view if you look at the last 50 years. But as you mentioned, from a fundamental point of view, you can argue the exact same thing, right? If you have those deficits, you need a lot higher prices to get new production in order. And there's also a lag effect because if you open a mine or whatever, it still takes a lot of time to get the mine up and running. So there is a huge lag effect still, even though if you decide to open a mine today, it takes a long time to get it ready. So definitely, uh, both sides looks fantastic. It really does.
Okay, so switching gears, and I know a lot of people, and I know yourself, you like uranium quite a bit.
Yes, I do.
So number one, what does uranium look like? And number two, do you like silver or uranium more right now?
Actually, I think I'm a bit skewed to the silver because it hasn't had those big moves like uranium has had. But if you look at the ratio where you compare, let me show you the URA against the metal itself. You can actually see here again, there's a lot of lines going on. I can maybe remove some of it, but definitely I want to remove that one and that one.
It's lots of
Uh,
support right
yeah,
where
it
we're
is
at.
at it is the miners or the ETF at least, the URA is heavily undervalued against the metal. And to me, this is still, I thought we were going up, like 9 months ago, we would be starting to curl higher, but definitely we're still on my path to having a massive bottom setting in here. And you can see here closer, we are actually squeezing up uh, at support within this downtrend here. We are starting to squeeze. You can see it there. So definitely, I think you can also see we're bouncing here actually as we speak on that lower trend line. So definitely uranium miners has done quite well actually. I think URA has performed way better if you measure from the March lows in 2020 compared to the Nasdaq and the SPX. And people are still not satisfied with the moves, and that is because the uranium spot price is at what 90 at the moment. So if you were to tell me like a year ago that the spot price would be at 90, I would also say that URA and the URNM would be way higher. But to me, this is a buying opportunity that you don't get very often. You are basically at the lows of the March 2020 event in according to evaluations against the metal itself. It is a buying opportunity in my view when you get this low in the ratio. So yeah, silver I like a bit better, but definitely uranium looks primed for a big move. And if we get that break, the natural way to go is that neckline up there. Not in a straight line, but that is really where we're going. So you're looking at a 3x outperformance by the miners against the metal itself. So uranium, even though it has done great, it is actually a hated sector in my view. If you look at the Twitter feed, people are very disappointed for some reason, and I think that is about to change. I really do.
So what you're saying is, if you guys have shares, just sell them to us. We'll take them off your hands.
Yeah, easily. I
And
haven't sold any ever since, late 2020.
yep.
So I'm happily riding this to that neckline, and then we will see what happens. But definitely, I think together with gold and silver, this will be a play that you can do for this entire decade. Maybe not all the way into the end of the decade, but definitely for 5 years to come. There should be some very good opportunities. And if you're looking at individual miners, you can actually see that a lot of them are sitting straight below massive long-term resistance going back 15 years, and they are both lagging straight below. That is one of the best setups that you can have. Because when you hit such a huge, I can actually show you one if I remember correctly here on top of my head.
How about Denison Mines? They've got a strong resistance line.
Yeah, we
Very
do, and
strong.
actually, yeah, and actually we do. This is the one of the trend lines going back to 2007, and actually on Denison, this is the Canadian ticker, and we actually have broken out here from that golden trend line, and now we're just playing with the double top from 2021. But we did break out, we did retest, and now we're both flagging just below a double top here. This is just one of
Doesn't
them. You
that
can also,
extend all the way back to the resistance? Because I think it goes all the way across right where we're at. Yeah, even back in 2010 and even all the way back in the 1990s, there's a big, that line right going across just below it. Yep, right there. Right where
yeah,
you're at there. There's a line that goes across. Yeah, all
eh,
those we were coming into that whole thick
yeah,
section trying to break through that. And that's why we had that big consolidation, in my opinion.
yeah,
But
exactly,
yeah,
exactly. And also this is what I was trying to refer to as this is Bannerman. So this is the Australian company looking absolutely primed for a bigger move here. We haven't broken this long-term golden resistance yet, but if you zoom in here on the daily, you can see here that this is also a bigger miner. I think it is it $1 billion? Only in
no,
quotes,
two,
400
yeah,
million, but still it's one of the mid-tier miners, let's say. And you can see here we are just sideways flagging here. You could argue some indirect head and shoulders, but we are just, in my view, pausing here, grinding sideways, and we are ready for a big move. That's the highest probability, anyways, in my view. Everything is a possibility game, a probability game, but definitely that is what we are doing. Just like you saw Denison just before, this is ready to break. And when you break such a huge long-term
huge
trend
move.
line, it's yeah, as you mentioned, it's a huge move coming, and you have more of these. If you look across the board, you have more of these just sitting straight below resistance. You can go into a smaller one. This is only 140 million, but this is mega uranium. You can see here actually we are breaking out of this huge bottom here, huge base. You can see going back to like 10 years or so, coming across here. We are peaking above here. Do we need a little detour maybe just to get the weakest bulls out? Sure, fine, but definitely getting above that 0.42, 0.44. I mean, this is the downtrend ride basing, and we are going way higher
Oh
in
yeah.
my view. Uh, and yeah, I wouldn't be
So
surprised if we reach highs over there. So
so all these Twitter people, all the retail sector, all these guys that are listening, what would you tell them when you look at all these different charts? What would you describe to them, and what kind of wisdom could you share with us? I mean, we're coming up against these heavy resistance lines. People are getting annoyed. They're becoming impatient as we hit these big resistance lines. And I'm sure you've got the opposite approach. You're like, hey, when this thing breaks, it is gone.
yeah,
So
yeah,
what
it
what
is.
would you say or tell people, or what would you tell yourself if you didn't know technical analysis? How would you describe what's coming?
Um, again, as mentioned previously, I'm mostly a technical looking at the charts only. But definitely the markets or the charts will grind you down, for a lot longer than you can actually imagine. So when looking at Bannerman, we're talking about when it breaks, but that could actually take 3 months to break. And we are just sitting here saying, just before Christmas that Bannerman is about to break, but we could get into like February 2024, and it still has done absolutely nothing. So people are getting impatient. But you have to remember, when we come up to big resistances, if you don't have a hard rejection and you're just going sideways from there, very, very bullish, and you should just wait for that break. That's where the opportunity lies. So again, from a technical point of view, you just need to, at least that's what I'm trying to do most of the time, is to try to interpret what the chart is telling you. And if you're going back to Bannerman, really, this is just, where is it? It's here. This to me, huge move here, a pole, and then you have a flag sideways just below big resistance, is pointing to a big breakout. And yes, it could go on for like two months still, but definitely have patience. And from a technical point of view, I'm more of that kind of guy. You wait for the breakout, the confirmation. There are different ways to do it, but that's what I'm looking for. So when we break that blue line right here, in my view, that's go time for the stock here.
So when you say go time, are you going to add in more, or are you just going to ride it?
I'm just going to ride it. I'm very, very well positioned here in uranium sector. And yes, if I have some dry powder at that point in time, I will definitely do it because if this starts to move, it's a no-brainer in my view. In my view, I could be wrong, obviously, but again, if you have this setup here, 7 to 8 out of 10 times, you will see a big move getting above the long-term resistances, and you just hold if you can, because it will be very, very violent from that point on. Both up and the pullbacks will be very tricky, just like you saw back, in the previous bull market in the 2000s. So
here's another question I have since we've got this pulled up. If this were to break and it were to move, is there any sort of price projections we could put on this? Like what I mean, do you know of anything that you could maybe put a price projection on, or where this could potentially go, in your opinion?
yeah, yeah. On top of my head, you can do measured move from the flagpoles depending on where you want to drag it from. But usually a level that I'm very very interested in, doesn't matter which chart, and that is the big breakout. You have this move here in 2007, and you can just see how important this level is. For example, roughly, let's call it $13 here for Bannerman. This was actually when we went into the bear market, huge retest, and then we just ever since bear market sideways action. So that to me is a typical magnet to hit, really. And when and if we get there, that will be huge, huge resistance. And that could be again, depending on how you play it, a good place to actually sell your shares of Bannerman, or to scale out however you want to play it. So that is one way. That is always a big level. And obviously you have, the recent highs if you get through that at some point in time. But yeah, there are different ways to do it. You can also do, as we talked about, this is a huge flag, right, with a price projection of way higher. So there are different ways to go about it.
So
But
what is
definitely,
that
yeah.
that flag? I mean, if you were to put that pull and then the continuation after the consolidation, what does that point to? I'm just curious.
I
You can start
I
it wherever you'd like.
I think I started here. That's the big move, actually.
Okay.
I wouldn't take the lows in here because you had this formation right there. So maybe if you
Okay.
take it from there, you can actually do the projection, and you can actually see the alignment.
Right. Yeah.
It's right there in my view. So definitely, again, if we break here, that would be a target, and that's a what's that? That's a 5x from here. So and that would only in quotes put Bannerman at a $2 billion market cap. And in this day and age, 2 billion is play money, right? So it's still, I think that's a very decent take on Bannerman if we can get there. But again, it won't be in a straight line like this. I can assure you. But definitely. Yeah. So yeah, again, there are miners that looks absolutely fantastic. There are more that we could go into, but then I think that's a different video where we only look at uranium. But definitely, some of them looks fantastic. It really, really does.
So uranium looks good. It's cheap. The equities are, everything's looking like it's progressing forward
Yeah,
for the most part.
yeah, exactly. And even though we have broken a quite important uptrend here, this is the URNM. The good thing for me right now, at least, is that we are not crashing down. We are just going. We have broken it, but we are still in bullish sideways action, and that for now could lead to that we are just winding up here in a bull flag to go higher. But definitely, this is still premature, so we have to, I think, wait a week or two to see if that is really where we're going. But yeah, the URNM is currently at double top scenario as well, so that's big resistance coming in.
Okay. So even switching gears from uranium, since we kind of dove in there, what about oil? What's your take on oil?
Yeah, sure. I think we need to go bigger time frame on this one. We covered it last time as well. We have this huge, again, on Bannerman, we looked at this long-term golden trend line as resistance. But for oil right now, we are above this long-term golden trend line, which is coming down here. So this is 2008. And then we have 13, 14 over here. And as you can see, we're coming in. And ever since more or less, we had the big breakout. We are touching that trend line. We are getting a move to the upside. So my view for oil is currently we are in this red downtrend here. So depending on how low we actually go, I think we can go down to roughly in the mid 60s. And that's where we should find a big support again. Obviously, if that support doesn't hold, that is a totally different scenario and we will have a lot lower prices. But for now, it is huge support. And I expect that at some point in time, this one here will break to the upside. And then we will start, a slow grind up here and getting into that neckline right there. So, and yeah, oops, excuse me, just messing with me because of that huge March 2020 move there. But definitely, in my view, this is a massive move up here, and we are going right now within a big flag. And it can take a lot of time. We can go way into 22 and 2024, 2025 before we break. But definitely, to me, this is just sideways bullish price action. And at some point in time, we will see higher prices for oil. That's for sure.
So when we start to break some of these to the upside, if they were to break, where do you think oil could potentially go in your opinion? What's kind of the upside move?
Yeah, I mean, when and if you break this kind of flag, I want to zoom it in quite a bit here. Yeah.
Yep.
When you break the upper trend line of the flag, the target that most traders are actually aiming for, I think, is always the high of that flag. That's their short-term, in quotes, price action, or where they take profit. And that's often also when you see the pullbacks. But again, if this is a flag, I think we're looking at a lot higher prices. Again, gold and silver and energy are very much related to each other, also together with currencies and devaluation of the currencies. So yeah, to me, this is pointing to that when and if this break at some point in time, maybe in a year or two, depending on how fast it goes, we're definitely taking out the highs, and from that point on, we have the big high over here in 2008, which would be the next target. So we have two big targets coming up here, so roughly 130 and then 140, 150. And again, we were talking insane prices from when we were looking at silver. But again, you also, if I remember correctly, you have a massive long-term, I think we have a channel coming across here. Yep, exactly. So that if this is the play, then you're looking, again, it sounds insane, but again, so does $600 silver. But again, if we resolve here, then we could actually see a touch of the upper trend line here at roughly $400 or so for oil at the end of this decade. So
here's another question. I know that you're bullish on silver. Do you ever do anything where you do like a crude oil to silver ratio or something like that? I don't know if I've ever really looked at that with any sort of. But if we're so bullish on gold and silver, and we're calling for mid multi-$100 silver, this would be an interesting chart to look at. It's silver to oil ratio.
Yeah, for sure. I mean, oil is definitely in. I haven't done this ratio at all. So this is my first time ever. I do ratios a lot, but I haven't done this one. But because mostly I do gold mostly if I want to do, you know, commodities
Yeah.
against precious metals. I do gold mostly, but definitely, you know, on top of my head here, we're just in the mid of a big range here. And yeah, so we should at some point in time, if uh, depending on, I think if silver was to go to 600 and oil only in quotes go to 4, actually that means that oil will become very undervalued against silver at that point in time. Um, so yeah, but it is very messy, this one here. It's not a chart that you can actually, in my view, do a lot of stuff with. I think maybe gold is better, but yeah, it's very messy as
Do
you
you
can see here.
see
So
do you see crude oil? I see crude oil outperforming in the 80s and 90s. Like it's in an uptrend with this ratio. And then I see a downtrend from 2004 onward, almost
yeah,
like the ratio has been compressing to some
yeah,
degree.
yeah, that is true. We have
So
this
I see an uptrend on that and then a downtrend. Yeah, yeah,
yeah,
yeah.
yeah, something like that, right? So yeah, true. That's also why
Yes.
maybe, you know, this ratio could go way down. So when
Yep.
silver peaks, maybe oil will peak as well, but I think silver will have a huge crash at that moment in time, but oil will perform way better compared to silver. Because I think
Crash in
when
the
silver,
ratio.
yeah,
Yeah.
crashing the ratio, yeah. So I think
Yep.
if silver gets to 600 in the future, I think it will also come down quite heavily and find a base, you know, I don't know, in the 200s, whatever it will be, for a very long period of time, just like we have seen, you know, from the past 20 years at roughly 50, 30 to 50 bucks. That will be the new 200s or whatever, where it will find a bottom. But oil will not crash, you know, that much. So it could go way up again from there.
Yeah. So, I mean, is there any scenario where gold and silver go up and oil doesn't go up with it
I think, of course, there
that
always
you can think
are,
of?
but I guess, you know, I think, you know, energy, gold and silver, and currencies, or the debasement of currencies, they are so much related to each other, and I think we stand in front of the gates of massive debasement of currencies. If you look at, for example, I will actually show you this because this is a very, very important chart. I think I have it here somewhere. Yep, this is the dollar. So this is the mother of all currencies, right? The dollar is the big one. Maybe the Swiss franc is there in the mix, but definitely, as you can see here, so this is the Dixie of the dollar divided by the inflation. So in my view, we are on the cusp. That's also why gold and silver are so close to the big breakouts. The dollar is about to lose its battle against inflation, and we're, in my view, about to go down here for a 50% debasement over the next few years here for the dollar against inflation. And that is why you will see higher gold prices, higher silver prices, and higher energy costs. Because if you debase your currencies, I mean, 1 ounce of gold is 1 ounce of gold. But if it takes more dollars to buy it, I mean, that's and the same goes for oil. 1 barrel of oil is 1 barrel of oil. So those will go up in price while you debase your currency. And yeah, I think that is where we're standing, and that's why gold and silver looks insanely good right now because of this ratio here.
So that ratio is the DXY, which is the relative strength indicator, kind of divided
Yeah,
by the inflation rate.
exactly,
So
exactly.
we think that inflation will go up and the DXY will kind of go down at the same time then. So
Yeah,
okay.
yeah,
Just trying
yeah,
to
exactly.
get it in my
I
head.
just wanna do like this here just to show you the relation between the loss of purchasing power by the dollar and gold. Looking back, this is 50 years. It is not a one-to-one, but definitely huge correlation between the two. And so I will just a quick note here. I have inverted the DXY with the inflation, so you get this view here. And again, if I want to show you, if this is the Dixie, right? If this is about to there it
Think
is.
higher.
If this line here is about to break, you know, in that ratio and go up here, so inflation will outperform the Dixie, that gold will follow. This is basically what this correlation means. So yeah,
And it looks like it's going to do that because your lows on the right hand side, they are making higher and higher lows right into that
yeah,
resistance.
yeah, exactly. Let's just
So
remove gold there. So you have
yep,
them here,
yep.
here. So
It's
now we
going
have the
right
top
into that.
there. So
It's it's going to blow
yeah,
right through it at some
yeah,
point.
yeah. And if you're invested in gold and silver, I guess that's good. But you know, I think 0.0 whatever percent of people are invested in gold and silver, and they will feel that pain. So we
Okay.
might have had a lot of inflation, 2 years ago. We felt that in food and so on, but this will be the second wave of inflation that will hit us within 18 to 24 months time. You will feel the pain again, and we will talk inflation. That is, in my view, a given. So the second wave of inflation is ahead of us. Maybe the third, depending on how you assess the inflation spikes that we have had, but definitely the second or the third is coming, and it is going to be a big one. It really is.
So here's another question then. If this big inflation is going to potentially come, and I know there's a lot of bears in like the S&P and NASDAQ, could those still go higher because of the currency debasement? Could
Yeah,
be
for sure.
so strong.
Yeah, actually, in the 70s, the the Nasdaq and the SPX, excuse me, the Nasdaq wasn't invented back then, but the Nasdaq, did make some quite impressive moves. But against inflation, you didn't actually gain anything for 10 years. So the SPX and Nasdaq could go up, and it could outperform, but you could also have a scenario where it goes up. But if you divide it by inflation, it is actually going down. So for sure it can. And that means that you would still lose purchasing power, even though you're gaining dollars in your banking account. So, yep, for sure.
Makes sense.
Yeah.
What other sectors are you following that look different? Like, what about I know you've got copper there. What's your opinion on copper?
I'm again, as we talked about, I was very bearish on the indices. This is inverted on the indices, the Nasdaq and so on. I didn't expect this kind of move in 2023, and the same thing for copper. This looked to me when we didn't know this kind of stuff over here. Looks to me like we were just going to grind higher, and I said, yes, we broke down here. This is copper about to really have a move to the downside. But ever since, again, surprised me really. And we had this rounding bottom here into the apex. And now, in my view, if we get above 4, roughly 4 here, that resistance right there, I mean, copper is going to really have a good probability of doing some really nice gains here. Again, if copper goes up, that is usually a sign of inflation to come. They are very much related to each other as well. So above $4 for copper, very bullish, and below 3.5, that's when it gets a bit more bearish. But for now, to me, this is all pointing to that copper really want to have a big move at that resistance, and we will see. We will have to wait and see if it gets there, but definitely getting back above that golden trend line right there after that false breakdown. Typically, if you have a false breakdown, the move in the other direction is very, very strong due to all the shorts that are still needs to cover and so on. So yeah, copper is also showing signs that inflation is probably, a few years out, in my view.
And is there any other sectors that you're watching right now that you'd like to talk about, or that I'm not asking? Like, here's one. What about palladium? What's your take on palladium?
Very good question. Actually, I've been following this, I think many has actually, but just to give a bit of history, this is the weekly. And for the past, I don't know, half a year at least, I've been watching this falling wedge right here. And usually in a falling wedge, at least there are probably more, but I have two scenarios. A falling wedge is called a bullish wedge for a reason, because they usually break to the upside at some point in time. But you can also have the scenario where you actually have a huge spill to the downside and then you snap back. And it actually, I want to show you on the daily just to get a bit more. Actually, when we started here, what I want to see very often, if you have the false breakdown scenario, is you have a huge spill, and then you snap back, getting above the wedge, and then the first pullback is actually where you buy, or you're getting the confirmation. So we actually did this 2 times. You had that spill, got back in, couldn't quite clear the wedge, one more try, and now we're above again. So what I want to see here for palladium, it looks really, really bullish for a huge bottom. Actually, I want to see that first pullback, depending on how it goes, getting bought back up again for a higher low, and then I think you have a major bottom for palladium. And actually, I think the case could be, or to me, looks right. I think we are going to visit a huge retest of that long-term trend line here. If we zoom in here, I think that's where we're going. And we're going into 1,500 for a huge, huge retest of a, what is it, 20 years, roughly? Only in quotes, 15, but definitely a huge retest of that golden trend line. and maybe it coincides with that blue resistance as well. But definitely, I think we could see 1500 palladium in the next year at some point in time. So this
Do
to
you
me,
think we could
yeah.
hit the? Do you think we could hit the top of that channel again? That you've created that orange channel. You think we can go all the way back to the top, and this is just a false breakdown of the channel that we recapture?
Yeah, exactly. I was just going to say, this is whenever you have a big resistance or channel breakdown, or a neckline from for an inverted head and shoulders or whatever, you typically get a retest of that neckline, confirming the breakdown. And so that is the big moment in time. And yes, that's why I'm saying that we will see that also here at roughly 1500. We will get a retest, and then we will see what happens. If we go lower, we could go lower, right, for a textbook breakdown retest resumption. But again, if we were to get back into that golden channel, that's obviously, as we talked about before as well, if you have a false breakdown, it usually leads to big moves in the other direction, just like we looked at on copper. So
yeah, and then we go to 6,000-7,000 bucks, and platinum goes to 14, 15, 20,000.
yeah. So yeah, that's definitely. But right now, platinum, palladium is really trying to show us that, hey, this might be a big bottom here. Again, it's still not clear yet, but this is early signs, and I like what I see. Definitely. We can switch on to
Platinum. Might
platinum.
as well go right in.
Good old platinum here. Again, the long-term golden trend line that I'm always talking about. And the funny part is that usually you actually have bullish sideways action below or above after a breakout. But this time for platinum, we've actually, cycled across that line for a long period of time. Yeah, exactly. And I don't see that very often. But again, there are many signs here. Again, I think I posted like a month ago that we have 4 steps that we need to get through. And the last one will be that neckline here for that big inverted head and shoulders if we get there. And that has a projection of at least 1400. But again, you also have a bull flag here, which has higher targets. So I think this will be like a tripwire if you start, if you start to take out that neckline right there, and these resistances, that will be, a shorter target will hit, and then it will trigger a longer term target and so on. And yeah, we have a lot of hard work to do here for platinum for the next 6 months or so, definitely. But I think when and if we get there, getting above 1100, 1200, maybe depending on where you have your lines, that's when platinum will start to follow gold and silver, maybe with a lag of like a half a year. We're talking about gold and silver prime to break out. Maybe you will see that breakout in platinum mid 2024. But definitely it will catch up. And again, we're talking fundamentals. Again, we are also running huge deficits, and this is, together with palladium, one of the most difficult metals to get up from the ground. It's so scarce. I don't know the exact ratio, but it is way more scarce than gold. If my memory is correct, maybe you have that better than me, but it's very, very scarce. So
yep. I think it's like 30 to 1.
Yeah, I heard that.
Can remember.
I heard that
Something
before
like
as well.
that.
So yeah.
Yeah. 30 ounces gold, 1 ounce platinum. Yeah.
Yeah.
God, it all looks crazy to me. All of
it. For sure. Yeah, it really does. And
is there anything else you'd like to share? Anything? Here's one. I know a lot of people watch this. What about dry bulk shipping? What's your take on that?
I actually cover that, every week on my channel. And if you asked me 6 weeks, 8 weeks ago, if my memory serves me well, I was like, this is not looking good. But now, holy smokes! I mean, the individual stocks is just doing amazingly well. You can see today as well, green across the board. And if you look at the Baltic Dry Index, we had this downtrend channel here. And actually, from a technical point of view, you also took out the neckline here, big move up, retest resumption, and that is the measured move. It is my view that we hit that expanding golden formation here. It is my view that we will hit that at some point in time again at roughly $6,000, $7,000 for the BDI. But if you look at some of the shipping companies, they They look really, really good. If I remember correctly, is it DHT? Yeah, exactly. This is also one here that I liked very, very much when we came into that huge move down here last week. I actually said that this is a primed opportunity for a buy, and we are now, higher again. And these companies, they pay a hefty dividend while you hold them. So you can easily have like 100% here for the next year or two, while you collect 10%, 20%, even 40% dividends in these stocks. So the shipping sector, again, looks really, really good. But had you asked me 2 months before, like, or maybe 2 or 3 months, I would say no. This is looking very grim. But again, things can change really, really quickly. So
Yeah, it's good. It's good. Anything else you'd like to share?
no, I think we covered what we usually do, and yeah, maybe if some of your viewers for the next time want to have anything differently, it could be crypto, whatever, then we can go through that. There's also crypto has also done insanely well. There is one
You
line though
like
I
those
will show.
crypto
Yeah,
miners, huh?
yeah, they look really, really good. However, I want to show you one line on the Bitcoin chart that has me still not convinced, and the
Yeah.
reason is you have this bad boy coming from down here.
Mm.
So, and we are grinding that in a huge bear flag in my view still. So in order for crypto and a Bitcoin, because if Bitcoin crashes, everything else will collapse, obviously. It needs to get back above that and negate that bear flag. But for now, this is not ideal. But again, it's all about probabilities. But for now, we have a breakdown and into a huge long bear flag. And yeah, we will see if it can get back above. But funny enough, if you go back to Amazon in the 2000, this move here is the exact same, where actually Amazon grinded that bear flag for a long time until it reached the highs, and then the rest is history. It came down 95%. I'm not saying this is going to happen, but for now, this fractal here, somewhat identical. Of course, not 100%, but yeah, I like to look at fractals, and I think we need a big bust in crypto in order to get all those insane coins out of the way. And then the ones who survives will be the ones who does insanely well, just like Amazon did, and what have you back in the .com bubble. They crashed, yeah, 95%. But look where Amazon is now. It's multiples higher compared to them. And maybe I think that's exactly what we need in the crypto space. So a big washout, and then we can rise from the ashes. But yeah.
Yeah, the Nasdaq needs that too, and the Nasdaq chart looks similar to this, I think, as well.
Yeah, it does. It does. Yeah, double top scenario. But I think the Nasdaq is somewhat up here, right? So at double top scenarios. But I know, and I follow some very good technical analysis guys, and they are pointing to a lot higher Nasdaq prices than
Gotcha.
where we currently are. So it's difficult. It's very, very difficult to predict. But there are pros and cons for a bear case and a bull case in both camps. So definitely.
Okay. Well, we can edit there. That we've covered a lot on that. So yeah, thanks for coming on, Kasper. Really appreciate it.
Yep.
For sharing all this information, for sharing your charting. To me, you're making me more bullish on stuff I'm already bullish on. So I don't know if that's good or bad.
As I
So
always say,
making me wanting to buy more.
yeah. But again, we are just sitting below the big resistances, and just as bullish as we are right now. If it doesn't break out, again, you know what the other side of the coin is. So definitely, but it looked primed. It really does. The risk reward in my view is favored to the upside. Definitely. So.
And if people want to follow your work, where do they go? How do they reach out to you? How do they follow you?
Yeah, as you mentioned in the early stages of the video, Twitter at uselinkinv, and the same for YouTube, where I do roughly 2 videos per day, give or take. Same handle, uselinkinv, and yeah, definitely give me a follow if you think if you like what you see. Give me a follow.
Okay. Well, that's all I've got, Kasper. So thanks for coming on. And if you guys have any other sectors that you'd like to see, put it in the comment section below as I, interview Kasper for the next time. So if you want to see something different, put it in the comment section. Love to hear your guys' opinion. All right, Kasper. Thanks for coming on.
Yeah, my pleasure.